But the big story for us has been WeWork, and the company's CEO, the parent company, We Company, of course, is Adam Neumann, and he is now expected to step down. He will, though, remain a non-executive chairman of the We Company. The current executives that they've got lined up in the interim to take over are Sebastian Gunningham and Artie Minson, co-CEOs for an interim period. With us now to join us here on the show to talk about all of the changes happening at the We Company, John Jannarone, editor-in-chief at IPO-Edge. John, it's been a roller coaster here for this company. Coming to this conclusion now, this future for We has been really in question. Investors really seem to have gotten to Masayoshi's son. Is that sort of how you're reading into this?
Yeah, I mean, this has all been really incredible. And, at this point, the way I look at it is that the space as a service party is over for these guys. This is a property company, a real estate company, and they're going to have to make some major changes if they raise this money because they need it. They're going to have to get a permanent CEO who might come from, something old-fashioned like a REIT, someone who has property experience. As I talked about before, the overhead that they have at the corporate level is absolutely staggering. So last year, they had $1.5 billion in expenses at the locations, but $2 billion at the corporate level. And as we've discussed, a lot of these costs are some of these side projects, or maybe some of these machine learning scientists or people that don't have that much to do with a good old-fashioned office space. So I think we're going to see a lot of changes come if this deal is going to get done.
What power does Neumann retain in his new position?
Well, he still has 3-to-1 power in his voting shares, so, I mean, it's kind of staggering. It's gone from 20-to-1 to 3-to-1 in just a few days here. He's still going to have the power to influence board decisions in a pretty significant way, though I would imagine for now, he's agreed to do this. I mean, he probably could have fought this, but the problem is if he'd done that, he would have run the company into the ground. So he's going to have to step back for a bit. I don't expect to see much of the Adam Neumann show for a while.
I want to go through some of the other parts of his control that have been stripped away as a result of this, some that have been reported by the New York Times today. In addition to this share now being pared down, his voting power from 20, he will also no longer be able to control more than a minority of the board's directors. He will not have control over board committees. And then, of course, you've seen him become this non-executive chairman. From an outsider's perspective, does that really, in essence, weaken Neumann, because he still is, right, as chairman of the company, although he's not executive? Do you still think, though, it weakens him to the degree where investors might now be more inclined to reinvest in an IPO?
Yeah, I mean, Hope, I really think that he's got his tail between his legs at this point. I mean, I get your point that he could have some sway over the board, but for now, he's not going to do that. And remember what a dramatic difference this is from where we were a few weeks ago when the S-1 filing actually said there's basically no corporate governance here. So now we're going to have independent directors. I would expect some new directors to come in probably as well. And yeah, he can still have some influence, but I don't think that's the question. I think actually the question now, and they've changed the governance probably as much as they can for the moment. They've got to address some of these operational issues. I mean, these guys just lose too much money, and they've got to start cutting some fat. Some of these projects, you might remember that he had the company invest in this wave machine company that sells these $19 million wave pools that really have nothing to do with office space. So stuff like that, and even some of the other projects that look somewhat loosely related. And we've seen this with other guys too, right? We've talked about Uber with some of their ancillary businesses. This stuff is not core, and it's probably going to have to go away. So I think the name of the game coming up to the IPO is cost cutting.
John, what do you take away from the role of SoftBank in all of this as well? And what does this potentially signal for future companies that they want to invest in who are going to look back at this and see just how much influence they had in actually the company before they were getting ready to go public?
Well, Brad, I mean, it's amazing because I think that Masa really believed in Adam. I mean, when you bet and you put a valuation at this kind of level, and remember, it was really only SoftBank putting more money into this company in the last 2 years. So it was a leap of faith, and it turned out to be wrong. So I mean, I imagine that that Masayoshi-san is going to feel a little bit stung from this and be a little more careful about betting on these visionaries going forward. Frankly, I think that this could be a wake-up call for the tech industry in general. Perhaps things aren't as egregious at other companies, but even good companies like Peloton, where you've got 99% of the voting power of the shares, staying with insiders after the IPO, I think it's going to be harder to get away with stuff like that. I mean, this could be really seminal.
But this is a real estate company anyway, right?
Right.
Sorry,
Exactly.
sorry, I didn't have a question to follow that. I was just clarifying something you mentioned earlier.
What happens
Yeah.
to the rest of the company now? I mean, the one man, sure, he is at the forefront of the company that he co-founded. This is sure his show, but there's still now a company underneath him that are really dependent on what happens here from here on out. So how worried should they be inside of the We company?
I mean, I saw a report today about cutting 5,000 jobs. So, I think they should be, I think they're probably a little scared. The email that went around from the incoming temporary CEOs also warned of some some difficult decisions to come. I mean, this is going to be a seismic shift in there. No more tequila before noon. This is a they're going to have to get back to real estate basics. So
Yeah.
I think that the culture in there is going to change a lot.
And you bring that up also because so many of these reports have described him as eccentric, that he is sometimes impulsive, charismatic, but unpredictable, calling this now a stunning fall. Do you think that we're going to have then a no tolerance attitude toward these types of founders in the future, given what happened with Travis Kalanick and Uber and now with Adam Neumann and We?
Yeah, that's right. Or, I mean, I don't want to compare him to Elizabeth Holmes, but there have been other bad actors out there from what I can tell. And I think, yeah, I mean, when you have a heady market like this, and you've got people pumping billions of dollars into companies that are based on dreams like this, and you start to see things go south, yeah, I think investors are going to get scared. I think that there's going to be a lot more diligence done before companies like this get this kind of funding. And interestingly, it was the public markets that recognized it this time. Really all of that filing we've been talking about the last 6 weeks or so. It was all right there. And I think that there was just such an element of hubris here that even with all those advisors, with J.P. Morgan and Goldman working with them, these guys didn't realize that investors were going to read those filings and push back. And look what happened.
All right, John, very quickly, we got to go, but we were pushing back the timing for their IPO and previously citing that it would allow them time to get their Q3 numbers in there, which could assuage investors a little bit more. Do you think they go public by the end of the year?
I talked to a hedge fund manager just now before we got on, and he doesn't think they can do it. I'm a little more hopeful. I think there are enough other stakeholders in this, I mean, including big investors who want to see this get done. And if they don't, I mean, Brad, if they don't get it done, they could run out of money. I mean, this is becoming a distressed situation. So I think they're going to do absolutely everything they can. My prediction is that we see some major cost cuts and change at the board level, and probably pretty quickly a new CEO come in. I think they'll try to get it done.
All right, sounds like the headlines surrounding the We company are not over just yet. John Jannarone, editor-in-chief at IPO-Edge, joining us here today. Thanks for your insights and breaking this down with us.
Thank you.